The election date of July the 2nd is finally set in stone, having been flagged for so long. It will be interesting to see how business confidence and consumer sentiment trends over this period of uncertainty, with the early polls looking very closely balanced, so the risk of a hung parliament. The latest Westpac consumer confidence read was pretty strong, although it was undoubtedly helped by the RBA rate cut. And we need to keep in mind that previous rate cuts failed to keep confidence levels elevated for more than a month or two. The federal budget is unlikely to have had much influence here, as there was a specific question on the survey on the budget, and the response to this question, whilst it did better than last year, was still in negative territory. The other key barometer of sentiment through the election build-up will be the exchange rate, which has continued to come under pressure after the rate cut, mainly due to the RBA's statement on monetary policy downgrading the inflation outlook, noting that inflation expectations will be persistently lower for longer. So exactly how gloomy should we be in the wake of the rate cut? Importantly, the cut was not due to a slowdown in our growth rate, which is still running at around 3% year on year, but more so due to the fall in the consumer price index and deflationary risks, as well as the battle to keep the Aussie dollar in check, which in itself shouldn't push sentiment lower. One of the other messages out of the RBA statement was the recent recovery in commodity prices, in particular iron ore, and the related rise in Chinese steel prices. Jobs growth going forward will be in the services sector rather than in mining, but this recovery will help the transition in the short term, with the price of iron ore doubling from its January low to around $70 per tonne. The outlook for China, however, is far from certain. And finally, on the topic of low inflation and its connection with Australian businesses, the very low growth in labour costs was discussed at length by the RBA in their statement on monetary policy, and it is clear for businesses that labour cost pressures will remain weak, which is all feeding into expectations of further interest rate cuts, the next most likely around August. I'll see you next week for the market update from Bendigo Bank.